Hello, everybody. This is Mickey Mao with CartoonMoneyPrinters.com. Today is Friday, February 21st, 2025. Um, I am joined by Astronaut Toad today. Why don't you go and say hey?
Good evening, everybody.
Yeah. Today we're going to be going over the market outlook. Are we in moon mode or doom mode? So, um, come visit us at www.cartoonmoneyprinters.com. Click the Start Now button, and then you can sign up through Whoop.com. That's one of our affiliate or onboarding. So create a Whoop account, sync your trading view in your Discord, and you should be able to join us with a month free trial. So fairly easy. Follow the steps. Without further ado, why don't you go ahead and take it away?
All right, well, uh, as we have been talking about for February, the all-time high did not get revisited despite how crazy bullish everybody has been and thinking about going to the moon because of all of the pro-crypto, pro-trading sentiment going on. This candle, the February candle, has only got 6 days, 7 days left, but it's playing out kind of how I had forecasted a month ago, or at the beginning of the month. It went up a little bit, and now it's dropping, so that's it. And I'm expecting that we might retrace down into this fair value gap. So 82,500, or if we get down to monthly discount, that would be 71,000 down to 69,800. If we tap the golden pocket, but that would completely fill the fair value gap, which would be bearish in terms of market structure if we just completely inverted this entire fair value gap. So for the really bullish case, I would like to see a lot of wicks down that just barely, like wick down to the fair value gap and then spring back up. Something like this. Maybe, I don't know. So that's what I would say we're going to get. But other than that, there's not much to go on the monthly chart. This kind of, it is what it is. There is this massive bearish divergence on the par, but I want to pull up regular RSI and just see. Yeah, regular RSI is giving bit of a bearish divergence as well. You can see it's just barely there. So default standard RSI is giving you that. Let's go to the weekly chart and see what we got. Weekly chart is still neutral, still stuck in this range. We've had this bad candle. We had a shooting star doji, and then we've had a down candle, and then 2 dojis, 3 dojis now. These are very neutral dojis. These are not hammer candles or shooting star candles. They are very neutral dojis. So 3 weeks in a row. Look at how let me hide this. Look at how these wicks on both sides of these candles are almost exactly symmetrical. That is so indecisive that we just clearly the market does not know what to do next. We might, and this is just when you see retail traders are probably going to get wrecked and hand all of their money over to the market makers. And I suspect that would be a dip to 82,800. Or at least below. We got a weekly fair value gap. And, this weekly fair value gap, 85,400. And then the monthly fair value gap, 82,800. And then there's another weekly fair value gap down here, 76,800. So, and then the golden pocket is right there at the bottom of that fair value gap. So if we wick, like this is not financial advice, because whenever I say stink bid or knife catching, you are buying a lottery ticket. This is a gamble. But with that said, stink bid at 73,900 or 74,000, you should be packing your bags. You should have a limit order waiting down here, just in case, because if price gets down here, everybody's going to be crying blood in the streets, but you know that it will likely go flying back up.
I just gotta
That's
ask,
just the way it works.
that fib that you pulled, can you show its start and ending?
Okay, yeah, so this fib is from the weekly internal low right here and to the weekly high. Let's see. Yeah. It's to that weekly swing high. We got a weekly SFP there. And this is weekly market structure because these two little candles aren't really counting as pullbacks, but you could call... Oh, this is internal. Yeah, up here is internal weekly market structure, but the whole external weekly market structure goes all the way down here.
Yeah, and
I don't think this is
there's a
internal
little
anymore.
bit of confluence between the 0.5 and the center of the FEG.
Yeah, I'm really expecting, again, set your stink bids, 80,900 or 81,000. I like to front run the whole things, so 84,000 or 74,000 something, 81,000 something, 182, blink 182. There you go, 81,182. There's a stink bid there.
And
So, but yeah, we got three dojis in a row. So
I do want to mention that the previous, I have a theory about what's going to happen with that, and I have a feeling we're going to retest the previous all-time high.
First or second? What do you guess is going to happen first? From here, does this look like it's gonna moon to the all-time high or drop first?
I don't think we're going to get a new all-time high. Like, I don't know, in my opinion. But I am naturally bearish. Like, one thing I've noticed about my psychology is that I'm always bearish.
You are a perma bear?
Kinda. Like,
Yeah, you got to be careful with that.
It's because I'm, like, expecting normal market structure. And, it's, like, a lot of this is anything but normal.
Yeah. You got some craziness for sure. Anyways, that's the weekly chart. Again, nothing. Haven't really had an update since for like a month now, or in all of February. We haven't really had anything different. So this is all internal market structure. We did have a bit of a bear div, and then if we look at the par, we got a bit of a bull div, in my opinion. Here, between this right there and there, that's a bullish divergence on the daily. But again, I'll pull up the regular RSI. We have, yeah, that's okay. Sorry. Yeah, the regular RSI, it's rolling over. You got, whenever you're looking for divergences, you have to look at both the highs and the lows, because at the tops, this looks like it's rolling over. It maxed out. Your RSI moving average is rolling over a little bit as well. Yeah, okay. That topped there. But then again, it's not even higher. So yeah, well, on the weekly chart, that's bearish. So from there to there, that could play out for a while longer. I would say to about the end of where this fair value gap is right now, mid-April. So we've got 2 months or so, or 1.5 months of this could possibly drop down. I'll make a forecast and we will revisit it. Here we go. I'm going to say that we take a high. We get back into, we get that fib golden pocket up there. And then we tank below there. And somehow by around this time, we get down there. Maybe we go down like that, but
give me one moment,
we
everybody. I'm gonna try switching something real quick.
Here's my weekly.
Give me a second. All right, so I switched the server to your area for Discord, so maybe the bandwidth will be better because it was going. Your connection was going to a different area than to me, and now it's just pretty much
That's
a straight
weird.
shot. So,
okay.
All right, go ahead. I'm sorry to interrupt.
Yeah, so that's the weekly chart. Again, we've got all these dojis, not much to do except sit back and wait for one of these lows or highs to get visited. There's lots of trades to be had on the smaller time frames, but on the weekly chart, there's just not much to look at. I'm going to dump this path in the weekly chart. We will revisit it each week and see what is going on. But let's move on to the daily chart. This daily chart is just even more nasty. And it's just dojis. Like, look at all, it's ridiculous. Look at all of these dojis. And even these engulfing candles are just barcoding within this range. We SFP'd, we got turtle soup here. We SFP'd the low, we SFP'd the high, and we are still internal to an internal range. So we've got these internal highs and lows. I guess that gets updated to regular now. Oh, because this whole thing is, well, we could call that. Yeah. The problem with the daily chart is that this move up was so powerful, it didn't really create much market structure. You could say that this is the external low here, in which case we are really quite bearish on the daily chart. But again, either way, there's not much to do except wait for one of these highs or lows to get displaced with momentum. We're not seeing strength. We're seeing wicks above all the highs and lows, and then it's just staying in a smaller and smaller range. So again, indecision, and just be careful, everybody. Like, don't get emotionally attached to any trade within this range. And if you get into a trade, you got to be taking profits internally. Don't get into a trade in here and expect it to go to the all-time high. You need to be taking profits as you approach either the highs if you're long or the lows if you're short, because that's, you have to expect what has been playing out to continue playing out. So if you get into any trades, take profits internally, and there's just, it's just nasty out there. The 4-hour chart, good grief. The 4-hour chart, let's see, where's my 4-hour chart? We had this range right here. Oh, actually, you see this? Technically, you could call it there and say that this is a 4-hour bearish break of structure. Because you could draw it like that. I'm going to call it in external all this way. We've got a bullish break right there. And we've got a bearish break right there. More turtle soup. The main problem right now with the 4-hour chart is that this created a fair value gap. And it is facing resistance already. So, because of this fair value gap, and this potential for a bearish break of market structure, the target should be this right here. I'm going to pull a regular fib projection. And let's see here. Yep, look at that. The 1.27 fib extension perfectly lines up with this low. So start looking for a short between this 50% at 96,700 and up to 97,100. It's below, this yellow line is the point of control. If I zoom all the way out, you can see this whole range. It's just been ranging. Let's see, where's my range profile? So this whole thing is just stuck in this range. Since November. Well, I guess we entered this range. I should draw it from where we entered this range, right around there. We entered this range in late November, and we have pumped out of the top of the range above the point of control. I mean, the value area high. But the problem is the value area high is so far below these highs that what that means is that these were very weak pumps. There was not very much volume going on up here. You can see there's a bit of a volume node right here. But that is just, it's not much. So we are below the point of control right now. This is a bearish setup. So expect a retracement up and then look for a short. The highest I would look for a retracement would be 97.69. 6.
And I just
But
wanna,
again, on the 4-hour chart, we're going to look at the smaller time frame. So where you look for a short is going to depend on the 15-minute time frame and the 5-minute time frame
yeah, and
on
I
the
just want
4-hour.
to point out too that sell-off was so quick. Like they took like a couple days to build up that liquidity and just to fucking dump it.
Yeah, this from the low here to this high was almost 3 days, and then it took out most of this in just a few hours. Yeah. So that's what I'm looking for. We're going to look for, I'm going to put a red box here. We're going to look for shorts between here and here. Okay. And we'll post in the private Discord if we see any actual trade setups. I'm really liking this this point of control as a line right there. That's a very good. We got this right here. This oh, is that a breaker block? Yeah. For lots of confluence right there with the 50%. Mm-hmm. So we'll post on the private Discord if we see a trade setup here. I'm going to look at the 15-minute chart. Let's jump down to the 1 hour really quick, just for fun. See what we see. Yeah, same thing. So now I've got the 4 hour chart and I'm looking at the 1 hour. I see a fair value gap right here. So that's a draw on liquidity internal. Especially when the 4 hour chart, the 1 day chart, the weekly chart has just been doji, doji, doji. Your internal liquidity is the draw. So if you're looking for a long, don't expect it to just go flying through this fair value gap, because it is basically the market makers are trying to squeeze as much juice as they can out of the retail traders, whether they are loading up to go to the moon or they are loading up on shorts to crash down. We don't know, but I am leaning bearish, and I think we're going to get that dump before we go back to the all-time highs, at least based on this. Let me, yeah, so that's already there. There's the 618. Yeah. The 4 hour chart and the 1 hour chart is about the same market structure.
The bandwidth is getting choppy again. We're going to have to get you closer to your router there.
Huh. Weird. Let me try this.
You're on the Mac, right?
Yeah, I don't have a Ethernet hardline.
And I know on a PC there's a way you can actually go to your Wi-Fi emitter and actually max power that in the settings, but I'm not sure about how to do that in the Mac. I can look it up for you if you want.
All right. Nope. Let's see. So let's look for. Yeah, maybe there was a long setup here on the on a smaller time frame. If we're looking, so this is the 4 hour external 1 day chart as well. So let's see if there was a trade to go long in this zone here. Okay, so there's 50%. It was reacted. Yeah. It reacted to this level. Oh, come on. Let me close Google Chrome. Oh, and we forgot to look at the market smasher on, what was it, the 4 hour or the 1 day? Yeah, the 4 hour has been squeezing like crazy. The daily chart on the market smasher is getting squeezy. So we've, on the daily chart, this is crazy squeeze. Look at that. Squeeze edge. Squeeze edge. So we've got a squeeze going on, and this is really, yeah, look at that. Whenever you have these squeeze clouds, they do act as support and resistance, because the squeeze cloud is standard deviation and average true range. And yeah, no bearish divergences. That doesn't look like a bear div there. We could get a bull div if this gets down below. If this goes like this, from here up to there and then down, and then this just goes down, but not all the way. below that recent low, then that would be a bull div. We'll see what happens. But on the 1 hour, we are looking at that. Smasher is just, the market smasher is just, it gave a nice short setup here. Wow, look at that. Woo. So there's the candle. Stop loss above the high. And your runner. Oh, 10.0 risk reward ratio. Is there a low to target back there? Yeah, I probably wouldn't have targeted any lower than this low right there. But that's a beautiful short. But what we're looking for now is, was there a long on this retrace here? Let's jump to the 15-minute. Jump to the 5-minute. Oh, I saw a squeeze. What was the squeeze? Beautiful. Look at that. These trades are just firing off. So this is one of those situations where I would put the stop loss below this low all the way over here, because this squeeze kind of connects and gives you the whole thing. Oh. But it got you in. You got your 2.0. Did you get 4.0? Nope, you just, oh, man. 4.0? No, not quite. You could have at least got some profits on this to putting your stop loss up at that market structure right there. But that was a beautiful long. Wow. And now, let's look at the 5-minute chart. Did this give a squeeze? No. That's a reversal squeeze. I wouldn't have taken that trade. But you did get some really awesome bull divs. 3 different bull divs here at this low. So that was a fair long to get into when this broke. It just didn't come back, though. Like, if you're looking at your market structure, this gets, it gets bullish internally here, but then even this does, even this one little retrace doesn't get to the 50%. So there's no real entry unless you're going all the way down to like the 1-minute time frame. Yeah. Even the 1-minute time frame doesn't really give you a good entry because it stops you out on this one. This, you can see all these wicks down here stopping out everybody. And then there's an inverted fair value gap. That's nice. This is just nasty. There's not much to look at there. Oh, the 1-minute gave a play. Let's see what happened here. Yeah, the market smasher gave a nice little 1-minute short there. I tend not to trust the 1 minute. That's rough. Coming down so hard there that you're not going to get the full trade there. I might have cheated and gone partial like that right there. Once that high got put in. That's part of the subjectivity of the market smasher. I think if you're getting a signal and it's a really wide one like this, you've got so much you've got so much range. The squeeze cloud is way up above this area. When there's so much empty space in between the price and the squeeze cloud, I tend to add an entry at like the golden pocket, somewhere around there, and then put that up there. And then as soon as that gets put in, yeah, you get your 2.0 there. Nice 2-to-1 risk, 1-to-2 risk reward ratio. Anyways, that's it. I think this ridiculous price action is going to crash. This is weird. What the heck? Why did it do this? That's not good. Markets are thin. Man.
Yeah, and that's on Coinbase too.
Yeah. Can't even call it a CME gap because it ain't the CME. Weird. But it is given a reaction there for the this might be the high. Inverting this fair value gap. Problem being, it's got to take this high out before I look for a long. So, what is it, 6:30 here, Pacific time? Yeah. This goes, gets up above that, and then it retraces down. I'll check in on this later. Might give it a long. We'll see. It's breaking through these fair value gaps here, so that's nice. Let's see what the 3 minutes doing. Yeah, that's 3 minute market structure there.
Let's look at the NAS.
Ooh, zoop, zoop.
Zoop.
Yeah, so let's pull back to the I never use the 1 minute folder for market structure drawings. So here's Bitcoin on this whole, oh man, that is a distribution pattern if I ever saw one. Man, do I have my distribution pattern? Let me see if I have my distribution pattern meme or whatever it is. Charts. So Wyckoff distribution patterns are really powerful. Wyckoff is a very old school here we go. Yep. Look at that. Okay. Distribution schematic number 1 and number 2. So this is what we're looking at right here. We're looking at one of these. So see how this equal high right there? This is distribution schematic number 1. The UT and the UTAD, like that is it. Look at that. There's that. And then this low here. It's not supposed to take out these lows between this. It's wicking down here. That's that. The SOW is something along those lines. But honestly, if that's not, yeah, it's given the SOW in one of these lows around here or something. But PSY up, down. I guess you could say no, because that's higher. Do we have a reaccumulation? We need to check this. Could be this. What do you think? That could be reaccumulation schematic.
Yeah. I mean, it does look like that for sure.
BC, UT, UTAD.
One thing that the reaccumulation schematic is showing is there's clearly a line of resistance where price doesn't want to go below, and we definitely have that. Yeah, once we got into this range, like every single time that we get down at that resistance line at the bottom of those candles, look how massive those wicks are.
Yeah.
Like,
even wicks... for this to come true, we need, yeah, so this could be the SOW, but it's just out of order between this. But either way, what that would mean is that we should get a spring and a test here. That we should get a dip down here if this is going to come true for reaccumulation. Okay. And looking at it as if it is distribution.
Just minimize your layers. You might have more real estate to work with.
Yeah, I feel like test LPSY. All right, I'm going to throw this in a folder. We will check in a week.
It's kind of funny how the distribution schematic 1 and the what's the other one that we call it, reaccumulation, they look so similar until the last little bit.
Yeah, and that's why I generally don't put that much trust in this, because you can kind of see how this would be this. Reaccumulation looks like a combination of 1 and 2. So it's all jumbled together and you don't really know what is happening until it's done and it has exited the box. Like you're never gonna know for sure what it was until it's off the map and you know,
Retrospect,
and then it's
yeah.
too late. It's kind of too late. Uh, but it just goes to show that like this schematic is like 100 years old or something. That's the crazy thing. Like this schematic is ancient in terms of
You should
chart patterns,
I'm not
but
sure
it still is showing up.
I'm not sure if you put that in the education materials yet, but you should.
Oh yeah, I'll make a tutorial video and post that in the private Discord about Wyckoff schematics.
Yeah,
Again, like
I
Elliott wave theory and ICT and all of that stuff, like I don't put that much trust in it because it's just hard to trade. It's just hard to actually trade it. Wow, look at that. It just went straight to profit. Oh well, there's that so much for that trade. Oh well. Oh. Yeah. This just makes the market hard to deal with.
Yeah, it's a chop right now. I think they're rinsing out retail.
Yeah. We're getting rinse and repeat on retail traders. We are like, this is just preserve your capital, folks. Don't go crazy with anything. Oh, we do have that's a 5 minute. All right. But see how now this is this could be a bearish if this SFP is that high. So this is 470.04. And what do we got? No, so it's not an SFP yet. And it might get a short trade. Got a lot of empty space down here. So, yep, I could see that happening. Look for a 1 minute short if it gets to this high. Yeah, look at that. It's putting in some market structure.
Yep.
Good old 15-second chart. Yeah. All right, that's not a trade anymore. So, one thing I wanted to look at in this whole, like, why we're bearish overall is the market cap of altcoins. What's the ticker for the altcoin market cap?
It's others.d.
Or oh, what the heck was I drawing here? Good Lord.
I think that was when me and you were looking at it. We brought up some channels, and you brought up the pitchfork.
Well, if we started it here, then I kind of predicted
Yeah.
the move. This is not good though. Like this is a topping pattern, y'all. Well, actually, that's a bullish divergence. That's not bad. And it could print another bull div. So again, this is giving me the vibes of we're gonna get a terrifying crash, but it's gonna be a bull dip. So bear with me. See, look, we got this down there, somewhere around there. Maybe it gets to one of those lows, and then it goes up. But what is that doing? If this goes down and then it goes up, then that is your bull div right there. So again, this just confirms our theory of down then up.
You want to draw the other line on the candlestick pattern so people can visualize it to give you the bull div?
Oh yeah. So for bullish divergences of any kind, you're looking at the lows. So this low is lower, but this low here, going from the candle closes, these lows are higher. So when this line is angled down, but this line is angled up, that's a bull div because you're measuring lows. Then when this low is higher and this low is lower on price, but on the oscillator, it gives you a higher low, that's another bull div. This is a hidden bullish. Let's see, do I have labels? Yeah, so this is a hidden bullish divergence, another hidden bullish divergence. There's a hidden bearish divergence there. That doesn't make sense. Is it measuring from a different... Huh. Yeah, I might be measuring from the wicks or something. That's not right. Anyways, this is a hidden bullish divergence. This would be a regular bullish divergence. And it gives me, this is a monthly chart, y'all. So we're talking, and this is what we said a few weeks ago, was we're looking at mid-July, August. At least we're going to require some months, June, July, August, to get there. I mean, it could, like, if you go straight down and follow this line, if we just draw a line, then it could happen as early as mid-April. But we probably gotta assume that there's some resistance here because this is a low where it's going to want to bounce. So fair value gap right there. See that right back here? Fair value gap, blah, blah, blah. Maybe get up there and then get slapped really hard. At the earliest, it still seems like June.
I could see that. I mean, Bitcoin's taken all the air out of the room. What's the others market cap? Like 8.55%. So, you know, relatively speaking, Bitcoin and ETH are just gobbling up all the liquidity. So I suspect that if Bitcoin bleeds more, all the alt market will bleed with it, but that'll give more room for alts to pop.
Yeah, that does make me realize we should compare it against what's Bitcoin dominance.
A BTCD.
Look at that. Okay, so that's with it lined up. It's just marching up. It tanked right here because this was alt season. That was alt season right there, you guys. 2021. That's what an alt season looks like.
Yeah.
Okay. This is not an alt season. This 2023. This right here. Let me pull up a different one. Now we can see it misaligned. Look at this. You got a bit of an alt season from November to December. pull it up on the daily chart. There's a bit of an alt season right there.
So yeah, you can see the inverse correlation of this. That's why I'm saying like Bitcoin needs to bleed before alts can boom.
Yeah. And what we're seeing is that both charts, Bitcoin and altcoins, are just kind of giving us the vibes of Bitcoin dominance is just chugging upward, whereas alt season is definitely a boom and bust situation. Really, really, yeah.
Yeah, I mean, all the liquidity is just tied up in Bitcoin right now.
This is a bit bullish. The weekly chart, let's see. No, yeah, see, there you go. That's, ooh, ouch. Look at that.
Would you look
Double
at that?
bear div and hidden bear div. That's no good. So the weekly chart is giga bearish. A monthly chart could pull up a bull div in a few months. The daily chart, like, so much for that bull div.
Yeah, and it can see what's happening to Bitcoin is being reflected by what's on the candle pattern now. That consolidation that Bitcoin's doing with the dojis of doom is what's making all the alts just absolutely afraid to pump.
Yeah. What were we looking at? Where's the fair value gap? Is it on the weekly chart? Yeah, so this is a weekly fair value gap. And then on the daily chart, we've got another fair value gap. So it looks like what comes next is upside fake out. But this is bullish. This is bearish market structure, sorry. This is down. This is the high that needs to get taken in order for market structure to officially be bullish, because this just absolutely ripped. Range 1 day. So we got all our templates in the private Discord. If you want all of these Fibonacci templates for ICT ranges, equilibrium, swing high, swing low, discount premium, we've got all the settings. We share these in the private Discord, so they are really useful. But honestly, just look at that. Like, it's just, we got the same thing. It's turtle souping, and it's just getting internal. Internal. Let's see what Market Smasher says about this. Oh, dun dun dun. A squeeze cloud. Oh no. Yeah, there we go. There's your short. Yeah. So there's your short. You could look for a long in this squeeze cloud here, I guess. That's about it. I'm bearish. It's just that all the moving averages have all flipped bearish. This is looking like so we're on the daily chart right here. So you go on the 1 hour chart and you find a short in this zone right here. Or you can find a long if it gets down here. We got so many dojis that it could go either way. But again, we're looking at others' crypto market cap dominance. So what you really are doing is you're waiting for this chart to get up here, and then you are shorting a weak altcoin. Whatever trash meme coin or hype, whatever coin you know is absolutely worthless, that's what you go when this chart gets up here. That's what you go in short, is that worthless meme coin that you know is just going to die and crash, 50% or 35% or something. That's what you do. That's the strategy here, is you wait for this chart to get up here or down here. You wait for this chart to get up here, and then when it does, you go on the 1 hour chart and the 1 minute chart to find your short on whatever is the trashiest, weakest, lamest altcoin out there. I would short ETH.
Yeah.
Fart coin, yeah. A fart coin, or whatever you think is a trashy altcoin, and look for your short there.
Okay, Penny's saying total 2 and then total 3 includes ETH is total 2 and then total 3 excludes ETH. So total 2 includes ETH.
Similar thing. Yep. Yeah. These are looking similar, and it is giving me very bearish vibes. Look at this. You've got these two gaps here. That is a perfect. Ooh, that 50% got front ran. Yeah, watch total 3. Then when it gets up here to this 50%, you short your trashy altcoins. Okay. And what are we on the daily chart? Let's pull this up. Wednesday, Thursday, Friday. We will look at this and see where we are next Friday.
Is it because you have BTCD on there? There we go.
Oh yeah. Whenever I put something up, it turns it into a percent because it's comparing them. But yeah. Oh man, there's the 1 trillion mark. Okay, so if this short doesn't play out, look at that, folks. Right at the 1 trillion mark is the 50% of this fair value gap. So here's your 2 shorts right here. 956 billion market cap. You look for a short on a trashy meme coin, and then if it breaks up here, you look for a scalpy, crazy knife catching short on a trashy meme coin. Yeah. So all in all, we're very bearish. And we were going to look at NASDAQ.
You have it up there.
Oh Jesus. No, what happened? Oh no.
I can't believe you've done this.
Did I get a trade? Oh, what's this going on?
My bearish friends. So yeah, Ross, I was just thinking about you. Stay liquid.
Yep, there's that. Whee. That is a reversal. Let's see what we got. Oh no, it's hidden bearish. I can't take that long. That is so bad. That's just not good. It is bleeding. It is hemorrhaging. I mean, technically this could print a bull div. This hidden bear div would get overridden if you got if this low gives you a oscillator low that is higher, but the price action does a lower low, Then, yeah, let's give it till about here, maybe. There's your bull div. But I don't like these like flat-ish things. Like when it's just kind of chugging down like that, I'm not really that big a fan. It is a perfect setup for a reversal. So like when you see this squeeze firing and you look and you think it might be setting up for a bull div, you look at this and you pull up the par and you start looking for your bullish divergences to get in long, because you know that this squeeze that got a plus is a fake out. So for example, on the, we even got a 1 minute chart. Well, it's after hours, Friday night, so it always happens. Yeah, this was after market close, so that's normal. But when the market opens on Sunday, I bet it'll gap up. Sunday afternoon, watch for it to gap up and go above this and then retrace down. That's what I'm going to look for, is that right there. And then you long this from somewhere around here in these fair value gaps. See what this is on the 3 minute chart. Yep. Perfect. Oh, no, wait, that's that. Yeah, got some options there. So I guess that's it on the biggest time frames, the weekly and the monthly chart. We are expecting either chop or down. And then on the smaller time frames, we are also expecting a bigger move down, but we might get a pump first before the move down. On like the 5 minute, 1 minute, 5 minute, 15 minute chart, we could be expecting a move up and then down. And then going from the 1 hour, 4 hour, 1 day chart, it is move down, then move up. And then on the weekly chart and monthly chart, it is down and then up. And that's it, folks. Any questions or requests?
Yeah. Why? I expect news. I expect news. We just
like Black Swan news, or just news?
Like good news or bad news. Either way, like we're in the perfect atmosphere for news to change the cycle.
Fair enough.
So we just confirmed, or what was it called? Was somebody just got approved for the nomination of the Commerce Secretary? And so that just happened today in the current administration. So we're barely getting pieces in place as far as the government is structured. And so we haven't even begun to see like the actual actions taking place of the current administration, yet good or bad.
Yeah.
So we'll have to wait and see where things land. I think that's like the major uncertainty that's probably why things are looking bearish and people are like, all right, well, I'm gonna exit my positions and blah blah blah.
Yeah. And usually we look at the chart and we see kind of a bullish bearish case either way. Like it could, if it could go up and then down, or it could go down and then up. It's always going to do both eventually. And all we do is we kind of let the news be an excuse for one or the other to happen. So people say, oh, the news caused the crash. But then again, look, if you're looking at the chart and you're like, well, the market structure looks like it's primed for a crash. So I don't know. I think it's all I think the market is an organic living thing. And yeah, we are primed for both a little pump and a bigger crash and then probably hopefully a bigger pump. And all we have, so I guess what I'm saying is wait and watch for which type of news hits first. If we get terrible black swan, crazy, scary news, then obviously you're looking for the drop to come first. But then or if we get crazy good news that's super bullish, then you look for a bigger pump to come before any drop. But either way, you kind of know that one is the fake out and the other is going to happen.
Yeah.
So if we get bearish black swan news, you can kind of probably expect that the market might just gradually grind upward first, leading up to that.
Which it has
and
been
then it crashes when it gets that news.
Since the 70s. Yeah. Like,
yeah.
Look at the NAS on the yearly. Can you go back that far? It's up there. Yeah, we made this measurement a while ago.
Look at that golden pocket catch. Man.
Yeah.
It's crazy that the pandemic dip, look at this. The pandemic dip is nothing compared to that 2022 market dump. But it did, look at that. It gave you, like if you had just loaded up on your 401k or your QQQ on the golden pocket of this drop, March of 2020, when the market was absolutely terrified, there you go. And then again, same thing on, oh, look at that kiss. 2022, the bottom of the crash in October of 2022. If you had a stink bid on QQQ right at the golden pocket, 10,500, it's now at 22,000.
Yeah, you're sitting.
You don't get 2x on the NASDAQ that often, folks.
It's also been years, so you're sitting on that for years.
Like here's the look at this. This is the .com bubble. Look at that gap. Wow, that's a black swan event. No, is that the .com bubble? 2001.
That's 9/11.
No, 9/11 is right. Here.
That's Y2K, yeah.
Man. Oh yeah, Y2K is right here. Nothing happened, so it's just a doji. The market pumped up to the 2000, and then this doji happened in January of 2000, and then it just ripped
3,000 on the NAS.
Yeah.
That's ridiculous.
Man. And then you got this. Sheesh. Wow. Oh, hey, a squeeze. Look at that. Got stopped out. That was a good place to pack your bags. Honestly, when you're in spot, like, I just add to it, and you don't have a stop loss if you're hodling for the long term. Like when you see this and it's post crash. No, but you can throw money at your 401k on the QQQ or whatever. Like you can wrangle around your again, this is not financial advice. This is highly speculative nonsense. We even had a bearish divergence here from these highs. But that's what you do is you look at this and you go, okay, it pumped massively and then it crashed a crazy amount. So I'm going to add to my spot holdings here as it's squeezing. And I'm also going to just set a stink bid for below these lows to try and you got a low there. Yeah, here's your point of, see how this level right here is respected from both above and below? Right there. There's your long. And you are in.
Just entertain me. From that spike until it dumps, what is the percentage of loss on that to your left?
$83%. The .com. The .com bubble. 83% pullback to seven. 3 digits on the NASDAQ. $795 for the .com.
That's disgusting.
This is when you should have bought Amazon.
Yeah. Yeah. I don't think the data goes back that far. Oh, it does.
Wow. Okay. NASDAQ had a squeeze. Let's see if it got A+. Come on. No. It gave you that channel, though. Okay.
That's Amazon.
We're going long at the breakout of this squeeze. Whee! Whee! Oh, Lordy. And the grand finale. 16,000%. And what's the risk reward ratio? 200. 200 risk to reward ratio. Oh my gosh. You could have even put that stop loss below the
and the negatives.
Wow. See, this is the crazy part is Amazon started at under $1. It started off at 6 cents. You could put your stop loss at 0. And you're still getting 171 risk reward.
I believe the term is called unstoppable.
Yeah. But this is also why like our current generations are so angry at the previous generations that got in, and they're sitting pretty and like, oh, why don't you, why are you unhappy? It's like, well, do you really think it's going to keep doing this? Like, in order for us to make 16,000%, like, you really think Amazon's going to go, if we get in here,
Never.
oh wait, so I gotta put the stop loss in a more respectful area.
0.
Yeah, there's a 50. Put the stop loss on Amazon at below $50 ish. But see, this is my point of like why the stock market's past performance is an absurd idea to like talk about. Here we are. There's 16,000. Do you really think Amazon is going to $36,000 a share?
No, they're gonna dilute
No,
their shares. They're gonna make more shares. Yeah. They're gonna do a split. They're gonna.
But even okay, so even if they do a split, even if they do 5 or 10 splits in the next decade or 2 or 3 decades, like you're not getting a 200. You're never getting a 200 risk reward ratio out of your investment again. It's just never going to happen again. So that's why everybody is looking to crypto as the really the only chance that the future has. $2011. Bitcoin's already up 43,000%. That's discouraging. So you're not expecting to get thousands of percentages out of Bitcoin again.
I could see us getting to a million easily. What would be the
Okay, but let's see what that is. I don't think that's that much. Like, put your stop loss below this. Yeah, okay, so 10x is 1,000%, right? Yeah, I just... That's the only hope of people who are hodling BTC and expecting to get anything near the returns that Amazon gave in the .com bubble and anything else. Which is partly why I am less interested in having a massive spot bag long-term holding that I never add to and just expect it to go to the moon. I am more interested in learning to trade and make a few dollars every single day.
Yeah.
And then actually put that money into savings so that it accumulates, not just because it's going to the moon, but because I'm adding to it every time there is a crash or a dip. That's what we should be doing, and that's why I like trading, is it's giving me more long-term hope because I'm not expecting that many of these coins. Like, let's be real, most of the crypto market is trash that is going to fade away into obscurity. And your chances of guessing which coin is the next Amazon besides BTC or ETH or Sol, your ability to guess which one it is not something you should trust your retirement to. Here's an interesting inverted fair value gaps issue. Look at that. Inverted fair value gaps are really powerful.
All right, should we call it here?
Yeah, my voice is getting dry. I need to call it a night. Anybody have anything to ask? I saw in the chat we had some. No, good. We had some commentary.
Thank you guys very much. Have a good night.
Good night.
All right.
My bearish friends. Yeah, that's what we're doing. Looking for spot entries.
Mm-hmm.
So.
Yeah, I crypto is probably like the last place for upward mobility. Like realistic upward mobility. You know, if you were to like squirrel away, you know, $100 out of every paycheck and then put it into a 401k, you're not going to see the kind of returns like this, even if you have it for like 20 years, as you would with having a skill set of trading.
Toad, I agree with you when you say trading, when you say taking profit is probably the best strategy in this market at the moment.
Oh yeah,
because 4 or 3 years ago, like hodling made sense, but it's not making sense anymore.
Yeah, and that's why I always recommend and teach in the Discord of like, start by at least once a month. You should be looking at the monthly chart and you should say, hey, what kind of monthly candles am I looking at? When this monthly candle closed in November, you see this massive candle, you should be doing nothing other than selling some if you bought anywhere before here. That there's only one thing to do. When you look at that monthly chart, November 1st, you got one job. You know, insert the meme of Loki here. You had one job November 1st, and that is take some profits. And I would wager the same thing on January 1st, because we had this doji candle and yet it pushed up but got rejected. Again, you had one job, take some profits.
Because I'm not to cut you off, but like my example is Rune, which was one of my biggest holdings, right? and I thought Rune would never drop, but Rune had an issue, and they dropped to $1.10,
Oh,
right?
geez. Yeah.
But I actually sold my Rune at 340 to do some other bullshit, But like the point of the matter is like, no matter what you're holding, anything could drop, right?
Yeah.
No matter what you're holding, anything could drop, right? Yeah.
This is what we're gonna get time and time again. Is that's a nice volume spike. Oh, look at that. Hey, I think with this much selling going on, it might be. It's a lottery ticket because, like you said, Rune had issues, and so now it could stay at $1 forever. But looking at that chart,
I think
that sell-off.
The issues weren't fundamental. It was something that somebody did in the ecosystem. It wasn't something fundamental, right? They had a lending protocol, and I guess what do you call when something is decentralized, when nobody should be in control of it? A DAO? Is that a DAO?
Yeah.
So because they had a lending protocol, and somebody in Rune shut down the lending protocol, the whole community freaked out because they thought no one was able to shut it down. So
Yeah, that's what happened here.
It wasn't like a fundamental issue, so I do think it will recover. But the point of the matter is that anything could crash.
Well, that's the issue with
Yeah.
a lot of these altcoins is the minute,
Exactly.
the minute
Also,
that,
exactly.
the minute
Exactly.
that
Exactly.
people lose faith in the project, it's like
Everything,
it's a death
exactly.
sentence. It's a death sentence
Everybody-
for a coin.
Just like Bybit right now. I'm not saying it's gonna happen with Bybit. It's that people will lose faith and they'll pull their money out, right?
Yep.
So it's the
Yeah,
same kind of
exactly.
issue, right? Yeah.
So, all right.
Yeah.
Do you have any other questions?
I'm good. You guys have a good night. Have a
Alright.
good Friday night.
Yeah, let's go ahead and call it here. Thanks for joining us, everybody. If you want access to the server, go to cartoonmoneyprinters.com. Click the Start Now button, and then sign up through whoop.com. They're our partners in this. So, yeah, you can get access to all, 7 of our custom in-house indicators. As
Yeah.
well as access to Astronaut Toad and Kermixalot and some of the other expert traders that we have in the group. So we also have alert bots with the PAR system. We have a PAR system alert bot that pings us when conditions are optimal. But yeah,